Hey everybody, it's Pete. Good morning. Welcome to Stock Trading Pro and welcome to today's Stock Market Live. We have a ton of stuff to talk about today, and I think the biggest question is if you did your game planning last night and you look for the best stocks to buy now, the question is how many of those stocks are now actually in bearish territory, but clearly what a lot of people might call oversold and no longer a good sell short. So we're also going to introduce something called exhaustion today, which is a very specific type of candlestick pattern that works with a lot of reliability. We use this a lot on the day trading side of things, as well as on the swing trading side of things. So what we're having today is where the energy sector, which has clearly been the best group of stocks to buy now, has still reached new heights. But what we're seeing on the charts and what we're seeing in the volume, which the two of those things together are what we call tape reading, we're seeing that they might be what I might term as a little bit long in the tooth. So you've heard me mention these kind of ideas before where they're still obvious, but not a new swing trade, regardless of how you put those positions on. So what we're going to do is we're going to work on our way over to the charts. We're going to take a look at the best stocks to buy now. I'd also like to hear from you. What stocks are you looking at today? What stocks might match your personal criteria today? Are they already bullish stocks that you're looking to buy, or are these stocks that have pulled back a little bit and you're kind of feeling like they might be back in an area that makes sense? Because remember, we're buying stocks based on their future cash flows. That's why smart money pushes these stocks up. So we're going to take a look at a stock like AFRM today, which was $170 not too long ago. And if I believe last time it was maybe 2 days ago, it was in the 30s. That's a big drop. Now, we don't want to be buying stocks simply because they've fallen a lot, because they're down there for a reason. However, if we pay attention to the tape, if we start to look for what I'm going to show you today, which is called exhaustion, and if that exhaustion turns into accumulation, you start to stack the setups and you start to have some pretty good ideas back in the other direction. So we're going to take a look. Are there some stocks ready to bounce today? And can we find some good entries? So we have a lot to cover today. I want to thank you so much for joining me today. So stick around. I'll be back in just 1 second. Okay, so thank you so much, everybody. Obviously, I want to say hello to everybody. Joe Toothman, how you doing today, pal? Good morning, good morning. All right, doing a little bit of research. I love to see that. MRVI, always a pleasure. How are you, buddy? Scott Henderson, some amazing results that you've had so far in only 2 weeks in the boot camp. So I wanted to thank you so much for that. I really appreciate it. So let's actually start out with that. Let's actually take a look at Alcoa. First, we're going to take a look at the market. Obviously, as we mentioned, the stock futures are actually up a little bit right now, 21 points compared to where they closed yesterday. So yesterday's close is right down in this area here. So you see we're actually having this pretty nice bounce off of yesterday. Now, it could be because of what they're calling a short-term ceasefire. I don't know. The reasons really don't matter when we're trading. We're really mostly concerned with what's going on in that moment that we're looking to buy stocks. So oil jumped again, and working our way over into crude oil, you can actually see how far it got over 120 and higher yesterday, but we are seeing this expansion in volume. So let's actually hop on over to what Joe mentioned here. We'll take a look at some of these ideas, but more importantly, Scott actually mentioned taking a look at Alcoa. So what I'm actually going to do, I'm going to actually go to a different group of stocks, because right now the way we're looking at things is that we're seeing exhaustion on the buying side on the energy stocks. We're also seeing exhaustion on the selling side of stocks in airlines and cruise lines. Now, this is where you really need to do a little bit of a deeper dive into your thought process. There's a big difference between it's no longer a good short sale for a swing trade versus it's a good opportunity to buy that stock. There's a very big difference. So looking for a spot to cover. So if it's going down, and remember yesterday we showed you the trade that we were in General Motors, just to give you an example. The General Motors trade that we put on is now reaching what we might call exhaustion type volume. So if we zoom that out, you can see that we're starting to see a big exhaustion candlestick, which means a lot more volume in that shorter period of time. So what we did in our General Motors trade yesterday is as it started to push down and we started to notice the volume started to expand after a bunch of days to the downside, we actually scaled out of some of the short sale. I believe it was a $5 profit on that first piece. And now we're using what we call our profit maximizer on the way down. So just to give you an example, we have a certain level that if it starts to rally, then we'll take the rest of that profit off the table and we'll look for another idea. So I want to shift on over. I want to first give you the textbook definition of what we would call exhaustion. So you might have heard it. There's a couple of different things that you might have heard it. You might have heard it on the floor of the New York Stock Exchange called a cleanup print. You might have also heard it called capitulation. In my language, in the boot camp, the way I teach everybody, I call it exhaustion. So these are all basically the same exact thing, but what I want to walk you through is exactly what it means. So if you could imagine that somebody has a very big order to buy or a very big order to sell, they're working that order because you don't want to just go out to the market, alert everybody that you're looking to do something because everybody will pile on and you'll get really crappy prices, whether you want to buy or sell that stock. So what happens is you work the order, and us as tape readers watching the order flow, we're looking at it from one day to the next. If you're a day trader, from 1 hour to the next, paying attention to make sure that the volume, which we get a lot of good questions here about volume is rising as it starts to push up and getting lighter on the pause. So whoever has that supply and demand takes a break and then steps back in, and they're filling those orders, which is what creates the bigger volume in the direction of that move. Now, here's the part where a lot of people get exhaustion confused with fuel. Fuel is the first time a stock is breaking out. Looks very similar. Here's what I want to get across, and I'll actually come back over here to the screen. So what we're looking for are large bodied candles with big volume. And this is the important part, after a sustained momentum move. And that last part is the most important part here, after a sustained move. So we're looking for large body candles. So if it's to the upside, they would be red. If it's to the downside, they'd be green after a sustained move. So if we take a look at the General Motors chart here, this is a pretty sustained move. Even this move right here is a pretty sustained move. And now we can see an expansion in volatility. So if we go out to some of the other stocks, hey, Simon, how's it going, pal? Good morning. Good morning. So now we're looking at some of the other stocks like Citigroup, and look at the expansion in volume here, right? That is just crazy how big that volume is, right? Also looking at Morgan Stanley, but more specifically, we'll take a look at what Scott said, looking at Alcoa. You can see that Friday in Alcoa, after the sustained move, had a large bodied candlestick. So again, if we bring this back in, and this is where a lot of traders, this is where really a lot of smart traders get into a little bit of trouble, where you need to understand that it's not necessarily just one part of the setup. And I think that if you just take that one step deeper, again, we can talk about driving all the time. It's not just the brake. It's not just the gas. It's not just the steering wheel. You have to understand how each one of those are used at the right time and what they mean towards whether you're going to step on it or whether you're like, oh, wait, something changed. And now you're kind of in stop and go traffic, or it's raining or whatever. So order flow is the bigger picture. Exhaustion is momentum. Momentum finishing more often than not with large bodied candlesticks with large volume after a significant move in the direction of order flow. All of those three pieces are what go into exhaustion. And this is where it gets messed up sometimes, is it's not just the large body candle. It's not just the volume. It's all of those pieces together. It's step one, step two, step three. You stack those together, and that's what it means to see exhaustion. So now what's interesting about that is, and I want to be clear about this because I point this out all day, every day in our Discord community. I see it happen. I take a picture of the chart and I post it in there. And we actually had something from yesterday that we pointed out. You know what? Let me actually pull that one up because it's pretty interesting. It was here in Kroger yesterday. And let me actually make this big because I want to show you both of these ideas from yesterday. So this is really that important. I can't get this across strongly enough. This is really that important. I want to pull this up and I want to show it to you because the trade for exhaustion, when you have these big moves, these big obvious moves, you're like, oh, you want to get, you kind of get nervous. You're like, I don't want to give this thing back. I don't want to give the profits because of how fast it's moving. You want to lock some of them in. The trade in exhaustion is not to get out of the trade, because we never want to put limits on the stocks that we buy and how much we could make on them. But we need to recognize when something has changed. So again, as with everything we talk about on these videos, these are for educational purposes, but what I'm walking you through is exactly what I tell everybody to do as far as the price action. So here's the call that we made yesterday, and it's kind of cool because it's actually time stamped. So you can see here in Kroger yesterday, and you can see here is March 7th at 10 o'clock in the morning. You can see that I pointed down to look at exhaustion. So if we go to the chart in Kroger and we take a look at this, it's not just yesterday's price action. And this is really where it gets kind of confused. And we had to really get into a deeper dive on this yesterday. We're more talking about this move and the percentage move than we are necessarily just talking about that short-term trade. So when I call out these kind of ideas, and I'm calling out Kroger, I'm talking about it on a 5-minute chart, I'm talking about it at 10 o'clock in the morning yesterday, and I'm pointing to the exhaustion after the stock has rallied hard like this and we're seeing bigger volume. What I'm essentially telling everybody is, if you happen to be in the stock, whether as a day trade or a swing trade right now, but especially as a day trade, I am telling you based on my experience, after those 5 days of buying, after the strong morning, and then after we see that exhaustion candlestick, move up your trailing stop loss in that trade, because the tape has changed. We want to give it a chance to have what we call, kind of it skids past that level and then comes back around. But you want to be aware when that happens. So if we go back to the call and we take a look at it. So again, this is timestamp from yesterday. Kroger 5-minute chart. You can see the stock was up 6% at that time. And at 10 o'clock in the morning, here is what ended up happening after that. So you can see right here is where we made the call, right into this candle. And this is what ended up happening after. Now, what's kind of interesting is you can see that this actually imploded. Exhaustion came in again, and it kind of just went sideways. It stopped going down. But here's the thing I want to point out. The reason I'm giving you all this setup today is that we have a lot of exhaustion candles, both on the buying side today and on the bearish side today, which means that it's most likely to see that this heavy selling stop, at least for the short term. So if you happen to be long puts right now, where you bought puts expecting the market to go down or your stocks to go down, if you happen to have bought inverse ETFs expecting the market to go down and those inverse ETFs go up, or if you happen to be short selling a lot of these stocks, what I just showed you in Kroger on that micro time frame, and look, I mean, it's timestamped. We call the top in the stock. That's a pretty powerful thing. I mean, I do this all day, every day, because, look, I'm doing it a long time. I've kind of mastered tape reading on an intraday basis and on a swing trading basis. This is the kind of things that you want to learn and aspire to integrate into your trading, where you understand which side of the market to be on. You take it deeper and you understand what we call the optimal entry. So you're picking a side, then you're picking the right spot, and then you have this volume and price action sequence together that understands when it's time to do something different, when it's at very least to sit up in your screen. So again, this is timestamped from just yesterday. This isn't a chart from like 2000 and the dot-com boom. This is just yesterday. So what I hope you would do is watch this video again, take a look at what we're talking about, look at the description that I just mentioned of what exhaustion looks like, and I'll show you that just one more time so you can get a pretty clean visual of it. So this was the call, Kroger 5-minute chart today at 10:11. But the reason I made the call is because of what happened on the daily chart and how volume is increasing, and based on knowing what the stock normally does and what's the biggest move of that stock. You can go back a year, you can go back 18 months. The stock has not had a big move of that magnitude. But what I want to get across here is I was not looking for a top at all. What I was looking for is, and again, and I talk to you about this every day here on the live stream, what do I want to see? What don't I want to see? So as it's going up and pausing, whether it's on a day trade or on a swing trade, I want to see it going up and taking a break on lighter volume. But knowing what exhaustion looks like, knowing the stock has already gone further and faster than anything it's done in the last 18 months, maybe even longer than that. Now I'm at least on alert to say, okay, being long here, being a buyer is the right idea until the tape changes. So what I want to challenge you to do right now, we had a lot of good conversations about this yesterday, is how do I see this when it's happening? How do I pinpoint that at the time of making a decision? And actually, John Bates is on the call right now. We actually had a conversation in the Facebook group yesterday talking about what do I want to see? So here's where a lot of really smart traders you just need to go that little bit extra step, is that you need to know what you're looking for. So what I'm looking for when I buy that stock is certain type of price action to tell me it's still valid. But I also have to have in my mental makeup what would tell me it's changed. And I actually saw a nice post here before by somebody saying that they were long some ideas. They bought some stocks as investments, but they're not sure when the tape has changed. They're not sure when the order flow has changed. And now they're taking a little bit of a hit because they didn't know when it changed. They didn't have a decision ready to be made. So this is kind of exciting. So again, when you talk about the call that we made, it was all of those, the daily chart included based on what the stock normally does. And this is what ended up happening over the next couple of hours, where 62.50, that's a $5 move to the downside. That's a pretty big move to the downside. And we also had another one very similar in another stock yesterday that punched through $100. You can also see the expansion in volatility over the last two candlesticks. And then you can see what actually happened yesterday as well. So now you can start to see it. Look at this on the way up. Look at the exhaustion and the stock pulling back $8. So do me a favor. Type into the chat here. Do you think this could be valuable stuff that you could add to your trading, where you bought the stock, you're still in it, you're seeing what you want to see, and then all of a sudden the tape changes because you know what you're looking for. And then you decide, okay, I need to do something. Maybe I'll scale out of some of it. Maybe I'll move up my trailing stop loss tighter. I'll still give it some room to go, but you sit up in your seat, you write down in your journal, and you say something changed in these ideas right now, and that means I need to change my trade management. It's pretty darn exciting when you think about it, because remember, we talked about this yesterday, that your goal, my mission is to help you be the reason you make money, but that means that you need to have a structure. You need to know what it looks like for it to be a good idea. You need to know what it looks like for that idea to still be valid, and then you need to know what it looks like for that idea to change. So what's kind of cool is I keep saying cool. I want to just bring these up on the screen again, because I think it's kind of important. So exhaustion is one type of volume price action reversal. So I'm actually going to bring this in here. Volume / price action reversals. And the other one is what we call accumulation or distribution. Now, the difference between the last two and the first one, exhaustion happens fast during momentum. So I'll just put that in there for you. These two happen during a pause. As a matter of fact, I'm going to even say that a little bit better, a prolonged pause. Now, we've talked about this. If you want, what I think is kind of smart, if you don't mind, if you want to take this with you, I'm going to put that back up on the screen again. Take a snapshot of it so you have this information so you can start to implement it for yourself. These are the kind of things you want to put on Post-it pads and have them stuck on your monitor so you can start to pay attention to it. One of the biggest things that we hear all the time is, that's great, but how do I see it happen when it's actually unfolding? And that was the conversation that I had with John Bates yesterday in the Facebook group. And by the way, if you're not in the Facebook group, you can click down in the description and you can get a link to join us over there. That was the point that we were having. And my answer to him was very simple. And I know John could actually, John's got a broad shoulders. I could lean on John, give him, tell it like it is, and we stay friends. What do I want to see? And when you're in profitable trades, you have to be saying to yourself, as long as X, Y, and Z happens, I'm still good, and I'm not going to get shaken out of a good trade. But if something different happens, which is what we're talking about here, right? Something different happens where there's a change in volume and price action, then we would make a different decision. So exhaustion, you can see that clearly here with this expansion in volatility, happens after momentum. Accumulation or distribution happens after a prolonged pause. So what's kind of interesting here is we're just talking about 2 day trade reversals. One stock fell $5 after we spotted exhaustion. The other one fell down $8.50 in roughly 2 hours just spotting exhaustion. So I want to make it clear, we're not necessarily talking about you traded in the other direction, but do you think that would be kind of cool to move up your trailing stop and keep those profits instead of watching a $2,000 or $3,000 profit kind of drip all the way back to nothing? Think about how much that makes over the day, the week, the month, and the year, where you're spotting these relationships in order flow, reading the tape, price action and volume, getting as close as you can to the optimal entry. It becomes kind of exciting, quite honestly, because now you know what you're looking for. And again, if you write something down based on the stocks that we talk about buying here, or even just the trading strategies we're talking about here, when you know what you're looking for, you're no longer lost. I can't say that any other way. So when you know what you're looking for in the market, and let's just take another stock, for example. Let's take Chevron, CVX. We all know that the energy stocks have been on fire. They've been the hot sector. We've been talking about it here pretty much every day for the last 7 weeks. If you understand what you're looking for and you're only looking for opportunities in the direction of the obvious order flow, even when a stock is going down on the short-term basis, personally, I'm still only looking for a spot to be a buyer of that stock because that's the right trade. Then you need to determine what would reverse that back in the direction. The traders that get in the most trouble, they see these stocks going up and they're like, oh, it's gone too far. And if I catch it up here, there's so much more room to go down. What you should be focusing on is the fact that the stock has really obvious order flow, which means that you could look at the stock quickly. And again, this is another writer downer, is it obvious? Can I look at that stock and say, wow, it is obvious that buyers are in charge of that stock right now. I just need a spot to piggyback on with them, or when it moves back in that direction, I'm going to hop on board. So yesterday, if we take a look at the daily chart of Chevron, CVX, which has been the strongest group, right? It looks great that it closed near the highs, but yesterday it actually had a pretty big sell-off intraday. So while it's selling off in the context of this bigger move, I'm just basically sitting back, I'm having my coffee and I'm saying, okay, I just have to wait, keep setting alerts as it's coming down. When it crosses a specific level or gives me an entry pattern, then I'm going to get back into the idea. And you can see that actually happened yesterday here, where the stock bottomed out, and instead of looking for a short, it broke down, failed the support, went immediately into an inside candlestick and reversed. So now you have a $6 rally just simply waiting for the stock to bottom out. We're not picking tops. We're not picking bottoms. We're just noticing when something changes. So now, ironically, I want to work on over into some of the ideas. We have a much bigger list of ideas to short sell today, but many of those short sale ideas have gone too far. So they're well beyond what we would call the optimal entry. Now, what's kind of cool here is we got a bunch of good questions about what it means to be near the optimal entry. So I actually have a nice little, again, I'm going to put this on the screen. I want you to put this, take a snapshot of this. Gosh, where is it? I want to make sure I find it for you. I can't find it now. That's funny. Oh, here it is. Okay, here it is. I want to make sure I put this on the screen for you. So the questions that we get a lot is, Pete, what does the optimal entry mean? I understand the concept, but what does it actually mean? So I want you to take a screenshot of this, and I want you to file this into your mental bank. So this is how tape readers win. This is how tape readers actually put themselves in charge of the outcome. So here's what I want you to imagine. Imagine you're trading a stock and you learn that stock, and every single day you're trading it. And you know when you put on a new swing trade. I'm not talking about day trade. Day trade, we use average true range. For swing trading, we use average true move. So you know that stock. Let's say Franz is looking at Exxon, for example, and let's say he trades it every single day, right? He buys that stock every day. Not every day. He swing trades it, and he knows when it's slowing down, and he looks to book a profit. So Franz knows, again, just using as an example here, that when that stock moves for the maximum part of that swing trade, if I'm trading for cash flow, it moves $15. Just using this as an example, right? So a lot of the ideas that we're looking at right now have already gone to what they normally do. So here's what I want you, again, I encourage you to take a snapshot of this. Here's what we're going to walk through. So let's say that Franz is buying it here near the start of a push, and pretend this is a pause. So you still have room to go because right now it's pausing. And if the normal move is $15, he's pretty good. He's saying, okay, I recognize the order flow. I'm reading the tape. It pushed up on good volume. It's now paused for a few days. The last push was $15. Now it's pausing. So I'm looking for the next $15 move. So that will affect initial profit targets. That'll affect conviction level. That'll affect share size on the initial entry. However, let's say Franz is golfing for 2 days. So we got Fairway Sports here. So good, Fairway Sports. So let's say he's golfing for 2 days and he misses the first 2.5 days. He misses the first 3 days. Hey, I want to say Brian O'Shea, good morning, pal. So let's say that he misses the first 2 days. He knows it normally does $15, but now it's already gone $8 of what is normally a $15 move. So what does he do? It's the same trade. So here's the point that I want, and I want you to raise your hand for this because I used to do this all the time. How many times do you feel like as soon as you buy a stock, it moves against you? As soon as you buy it, right? You're like, why? It's only me. I'm the first person. As soon as I get in, it goes against me. That's because you're not recognizing the push and the pause and how far it's already gone. How far into the profit potential is that trade now? Now, we never want to put limits on what a stock can do, but we have to trade what normally happens and make confident decisions based on what normally happens. So Franz is looking at that trade and it's already gone $8 of the 15. It's the same idea, different outcome based on reward potential. So that requires different position size and risk for decreased profit potential. So if I told you, you now have $8 left in the trade or $7 left in the trade, what is your risk on a $7 potential initial profit versus what is your correct risk on a $15 potential profit? We're talking about more than double the profit potential versus half the profit potential. So you just got to be a smart business person. Say, well, if I only have half the potential profit in what the stock normally does, I can't take the same risk. It doesn't make any sense. You put a little bit smaller into that deal. So I'm bringing you through all of this because in my game planning last night, there were a lot of challenges as far as some of the ideas that have been pushing down or pushing up. They're now what we might call extended well beyond the optimal entry and have now reached that point where they've kind of gotten to their average true move. So that made today a little bit more difficult to game plan. So I'm telling you this now 90 minutes before the market opens, that some days you're going to find everything is like right at that pause, ready to take off. Other days, and I'll show you an example of that in a second. Other days, like today, we're way beyond the optimal entry. So for example, energy stocks are beyond the optimal entry. We're going to take a look at some of the airline stocks, which we'll actually hop into those quickly. So take a picture of this, if you don't mind. Take a picture of that because it's pretty important. So if we go back out to the daily charts and we start to take a look at some of the airlines, so clearly you should now, in the blink of an eye, right? This should be kind of fun for you right now because we just described the entire thing for you. Significant move, significant volume, increase in the size of the candlesticks, accompanied by massive volume. That's known as exhaustion. So if you're short, you move your trailing stop lower because you're expecting a reversal. If you bought the stock and you're long and you see it, you move your trailing stop up. So we're seeing that now in the airlines. So take a look at this. Look at that. I mean, that's like screaming at us right now to say we're well beyond the optimal entry. So we have that. We have LUV as well. Look at the size of that one. And American Airlines. So what is the trade here? And same thing in some of the financial stocks where we punch down and you can see that the volume is getting up and beyond. But I think it's probably a little bit cleaner here. So these stocks are now beyond the optimal entry. This would be a spot where you'd be moving your trailing stop tighter, like I showed you we did in our General Motors short sale that I showed you the picture of yesterday as we were moving it down. So I could actually show you that because we had the swing trade updates yesterday. I want to show you how we managed it. So as it started to push down, you can see that 2 days last week we moved the trailing stop down, exiting half on the open. We made 5 on that one, and then we kept moving the balance lower. You can see it by the end of the day is at 41.25, but it actually got even further down than that on a short sale. It actually went another $1.25 through there. So what's kind of cool about that is you find the order flow, you find the optimal entry, you learn to read price action and volume, you continue to stay in the trade until you see it change. And that's really where trading becomes one of the most fun things you could possibly do, because now you're like, okay, I kick out the losers, I take them like I'm supposed to, because that's an expense of running my trading business. The only next thing you need to understand is how to make more money on your good trades, how to hold your good trades longer, and then get to the point where you understand either through exhaustion type volume or accumulation type volume, which is a push down and a heavy pause over a period of time, usually a couple of weeks. That is where we see reversals. So what you want to write down right now is most reversals happen on heavy volume. That's a big thing to write down. Sometimes they happen with momentum, which is exhaustion. Sometimes they happen with accumulation after a down move and sideways, or distribution, which is a move to the upside, a sideways pause on heavy volume, and then that leads to a move in the other direction. So I want to give you an idea of a trade, though, that's actually near the optimal entry right now, which is kind of exciting because we just looked at a bunch of ideas where if you bought those stocks, you're going to trail. If you are looking for a new idea, you're going to try and find something that's as close to the optimal entry now as possible. And I'm going to show you a couple of ideas. So if we work our way over into, let's say, MRVI. So what's kind of cool about this is you can see the push and the pause, the push and the pause, the push and the pause. So what we're looking now at in MRVI is we are now closer to the optimal entry because the stock pushed, paused, and now it's waiting. Now, what else did MRVI do yesterday that is so subtle, but it's really powerful? And I'll just give you like a quick clue, because if you think about it, what did this stock do yesterday that the market did not do? So just really quick, like this is what the market did yesterday, and this is what MRVI did yesterday. So there's two things that I just taught you that are screaming on this chart right now. So what's really, really cool about this is, remember how we just did the lesson on volume and price action and exhaustion versus accumulation, distribution. But we also said the push on heavy volume, the pause on light volume. We also said try and get it near the optimal entry. So I'm going to walk you through these steps, and we're going to look at how this is perfectly unfolding right now in MRVI. But here's the thing. Remember, we need to know what's probably going to happen next by saying this and this and this and putting those pieces together. But what we are definitely going to do. So probably going to happen next, but what we definitely plan to do. So this stock, MRVI, held up when the market got hit. So everything is pointing towards this stock going up over the next week or so, right? Does that mean it definitely will? Absolutely not. It means that there's a good chance it will, which means that I should, in the way I look at things, I have no problem accepting risk on that idea because it's stacked up. And what I just said, what I believe is what makes our community, whether here on YouTube or anywhere else, is one of the most special places to be. Because I just told you everything could line up, and I'll take that trade with conviction, but there's still a chance it might not make money. Now, here's what separates you. This is why you're on this call at 7:30, 8 o'clock in the morning. You actually want to learn how to be a trader. You want to separate, I know everything, from I can't make any money. When you understand, even great ideas don't always follow through, and you put on the trades that you see line up with conviction, you completely take yourself out of the equation. You say, look, if this trade follows through, great. I know how I'm going to manage it. And I just walked you through in this video how to manage that entire position, exactly what you're looking for. Second part of the mental part of the framework. If I put on this trade and it follows through, great. If I put on the trade and it doesn't follow through, you know what? Still a good idea. I would take that trade 100 out of 100 times. I just need to make sure I manage the downside if it pulls back. That is what will separate you from everybody online who says trading doesn't work, because you're not looking for every trade to work perfectly. You're looking for the trades that you take to follow through most of the time, because you understood order flow, tape reading, setup, position size, and again, I'll pull it up here, optimal entry. Because you understand all of these things, this is what will separate you. So in our community, what I teach everybody to do is you put that trade on. Was it a good idea? Yes. Then don't worry if it moved against you. Manage it if it moves in your favor. We have the whole thing mapped out as far as here's where to enter, here's where to add. All of those things go into the equation. Why is this so different? This is different because this matrix, this, whatever you want to call it, are the pieces that go into trading. It's not just the bull flag. It's not the moving average crossover. It's what happens between entry and exit is where you get paid. So if you think about what I just showed you before, and I'm going to pull this up on the screen again because I want you to walk through it. It's that important. So we talked about Kroger. We talked about the exhaustion. We talked about how over the bunch of days, it was moving and moving with big volume. I made the call yesterday morning here, again, March 7th, 10 o'clock in the morning, and that led to this. So when you combine that kind of information with understanding the optimal entry, with understanding a trade like MRVI and where it is right now, you start to really feel like you know what you're doing. And you know why? Because you do know what you're doing, because you're asking better questions. You're not just saying it ran in a scan last night, I'm going to trade it today because I saw it on Reddit. That's not good trading. You need to get to the point where you build these arguments. Okay, it's obvious. What's the next question? How far from the optimal entry is it? Okay, good. And we'll take a look at MRVI. Now, what's the last thing that I taught you today? So if we go back here and we take a look at the volume, right? We know that volume and price action reversals happen on heavy volume, right? So now if we take a look at MRVI, what's going on in the volume with MRVI right now? Light volume. Look at this volume decreasing while it's going up and pausing on lighter volume. So MRVI is setting up as an opportunity where it's lining up very well for a trade today, a trade that I'll put on. If it follows through, great. I'll have a plan to manage it. If I put the entry on and it doesn't follow through, I also have a plan to manage that. And then I go to the next trade. We covered a lot of stuff here today. If this stuff was new to you today, I'd strongly recommend that you go back, take notes, and leave more comments below the video if you happen to be watching this video later. I'd love to hear from you. I'd love to hear your feedback. I'd love to hear if this was something new that maybe you've never heard before, maybe putting in those pieces together. If you could please do me a favor, if you got some value out of this, please do me a favor, smash that subscribe button, hit the thumbs up so it lets me know that these are the kind of ideas that you like to wake up to every day. And I'm helping you learn that there's a deeper level of trading. If you want to join me in the boot camp, you can learn about how to trade stocks in the video below the video as well. So what I want to do is I just want to give you a couple more ideas for some of the ideas. So MRVI is one that we're looking at today. And BBY is actually pretty interesting. This stock actually exploded and has now pulled back and paused. So now I'm looking for this to get back over 106 to head back up to the other side. So there's a couple of different ideas. We've talked about Newmont. Now, some of these ideas, what's kind of cool now is if you look at a chart like this and you look at that, all of a sudden you're saying, okay, how far are we from the optimal entry, right? You should be trained right now, like immediately, even just after watching this video, saying, okay, before I go and buy this stock, do I think I'm near the optimal entry? That's what's kind of exciting about this stuff is now you're taking it a step further and saying, if I choose to take risk, is it a good idea? And all the things that we talked about in this video today help you make that decision. Okay. I got to head over to our other meeting, everybody. Have an awesome day. Thank you so much for joining me today. I really appreciate it. Don't forget to hit that subscribe button. Give me a thumbs up. you have any more questions, join us in the Facebook group. That's in the description. You want to learn about the boot camp? That's down there too. Have an awesome day, everybody. Thank you so much.